Consumers now changing in every way, sleeping in strangers' beds, driving in strangers' cars, and treating Amazon like the world's biggest vending machine. So what about banking? What do consumers want in that space? Tony Chapman, CEO of TonyChapmanReactions.com, joins us now with more perspective on this. Here is the next great wave of disruption.
You have to believe it, because the sweet spot for disruptors is high margin, high transaction, tick, banking. Lots of borders to defend, so they got day-to-day checking and foreign exchange and wealth and insurance and everything in between, so they can start picking off the higher margin areas on it. And the fact that the world's moving, like the concept of cash and everything the bank stood for, and vaults and safety deposit boxes is all going up into the cloud. So I think the banks are vulnerable.
And now in terms of the banks being vulnerable, we know they also sit on huge piles of cash. They just generate it every 3 months. We get these astounding numbers. As the disruptors come into the space, how do the banks deal with that? Do they take on the technology themselves, or do they just swallow up any competitor?
Well, it's a combination of the two, but first of all, you think they've got a lot of fixed costs. 275,000 employees, spend about $28 billion in salaries, $10 billion on technology, 6,000 branches. That's a lot to defend when the disruptors are coming in and going, I don't have any of those fixed expenses. First thing I would do if I was advising a bank is disrupt the disruptors. They think fast transactions, saving money was the ATM machine. The disruptors are going to go to mobile and voice search. So the banks have got to be as good as and as competitive as the new ones that are coming and saying, what, branches? That's like a wireless company looking copper wires in the street. So the first thing is disrupt the disruptors. But I think the real area is going to be is wealth management. Wealth management is either going to go, if you stay in the transaction business, I have a mutual fund to sell you, it's going to go to price. If you get into the transformation business and demonstrate what you can do to help somebody get to where they want to go, highly personalized service, much more focused on outcome versus the transaction, then I think banks have a chance to defend themselves, because ultimately you still want your money in an institution that you feel is safe and secure.
Now, the banks probably figured out, or at least have figured out, what the boomers want, what the Gen Xers want, but what do the millennials want and the generation after them when it comes to banking services? Is that the nut to crack?
Frictionless. Even the concept of credit cards, I mean, it's all going to be, their mobile phones, just yet another example of it's a magic wand. I can bring in the world or desire within arm's reach. So the bank's going to have to be much more towards, for example, financial literacy. Don't teach it, gamify it. Make it as exciting to play as any online game, and reward the consumer for becoming more literate by getting a better deal with your bank. So create this sense of not tension, but a more creative relationship versus just transactions. I think they got to do a lot of other things in terms of just what do they stand for? Help youth find their path in life. Like, kids are going in spending $50,000 in debt to get a university education. I think the banks can play a role. What's the responsible use of debt to get you the kind of education that'll prepare you for tomorrow?
Now, when I get a chance, and it's not often, to sit down with a big bank CEO in this country, of course, we talk about financial disruption and fintech, and they say, don't worry, we're working hard on it. As you take a look at the work that's being done, are they doing nearly enough to sort of ride the wave, to catch this phenomenon? History
has proven it's very difficult to make yourself obsolete and to cannibalize your existing business, especially when you're reporting the earnings that the banks are. So they're trying to create their own things, like their own factories and stuff to do it. But I think they have to have the courage to realize that if they don't do it, someone else will. And that means, for example, a entirely mobile banking that has no interface, and have that go out and say, I'm prepared to let that steal share from my existing business, because if I don't set up that flank, someone else is going to run around my business.
Now, of course, there's been a lot of excitement, especially over the past couple of months, in the rise and fall of Bitcoin. It goes up, it goes down. But the technology underneath that, the digital ledgers, this is the kind of stuff when I talk to people in traditional business, they say there's definitely opportunity there as well. Does this sort of redesign the banking game in terms of keeping track of transactions and the traditional way we've done things? This seems to be, at least to have the huge potential to change the game.
I mean, the blockchain, and you're going to see it, especially in a more corrupt third world, become the ledger of choice, which means we have to be part of it. I think the banking play is to work with the government to make sure cryptocurrencies stay above ground versus going below ground. I think it's in the interest of governments, taxation, the economy we depend on, and I think the banks are going to have to play that role, but they're going to have to say, this is the ledger of the future, which is, again, completely reimagining and reinventing how they do business.
Now, when it comes to the banks, one of their big roles, obviously, is being able to be an intermediary between the saver who puts the money into the institution, the person who wants to borrow that money. They have been the big institution in between it all, granting those loans and giving me a little bit of interest on my savings. I'm surprised always at the amount of sort of fintech applications that are coming out to say, you know, you need to borrow some money. Well, think about Bay Street and think about us.
Well, the barter economy that's emerging, most of the Ubering of business is getting rid of the intermediary. And that's my point. If banks stay as a transaction, they're in trouble. They have to be much more transformation. I'm going to help you and your family get to where you want to go. Safety, security, your home, the things you want to seek in life, the retirement you want to realize. Much more esoteric versus I just want to get you to buy a mutual fund. And that's the big thing, because the fintechs are going to come in saying, I can connect the dots without the big toll booth expense. I'll crowdsource financing. You don't like the gig economy, you don't like to support this small business economy, we'll get the crowd to source it. And that's it's not unusual. You see it, for example, in the Korean community, how they finance each other to build up a sector like convenience. So it's going to happen. Again, are the banks prepared to be friends, much more of a hub, much more collaborative with the consumer, knowing that it's going to change the model right now where they slice and dice and put out a lot of profit.
Yeah, it's not going to be the same game. It's going to be an interesting one to watch. Thanks for your insight, Tony.
Thanks for having me.
Tony Chapman, CEO of TonyChapmanReactions.com.